Yeah, Guinness Nigeria Plc half year 2026 results. So this is Guinness. If you look at the investment context, because now our investment thesis or research for the public space has been divided into 4 contexts. So always make sure you read this context. Number 1 is the investment context. Number 2 is the complication, if there is. Number 3 then is the analysis. And finally, number 4 is investment implication. So this is going forward. This is how we segment our public posted research or analysis. When you overlay it with our paid research, that one has different in headline investment thesis, number, operational drivers, stuff like that. So going forward, this is the 4 framework. So we encourage you to always read through. Well, some of you just read the headline, download the graphics. If some of you read, then you run along with it. So you need to go behind the headline so I understand what has happened. So if from the investment context, like as the market is seeing it, the performance and what the market is seeing. So in Q1, in H1 2026, which ranges from January to June performance, that is why it's called half year. The net profit grew by 53.3% to a tune of 25.3 billion. Then the net margin expanded, borrowing nearly halved. The market is reading this as a recovery momentum, of course, if you look at the price. But the filing suggests the foundations are more complicated than the headlines. So there are things behind the headlines. So, and let's dive into it. So first of all, let's start with the graphics, show you the price charts, look at the income statement, balance sheet, and cash flow. Then we dive then into these things. Let's go. So for the graphics, remember you can always follow us on X, Apex double underscore invest. Download the graphics for free. Download and go through it. We made our time to prepare it for you. Okay, so let's go to the graphics. Is loading up. So this is first of all the price chart from when it was started being tracked from this tracker. So this is the highs at a time was in 2023. This was the high around 200, or roughly, let's give it, okay, roughly 280 naira in 2013. Is why we are showing this is also to help you understand. For some people who say, so far you are buying into a big good business, you should just buy. Like, it's one of the most, I don't know the word to use, but it's one of the most misconstrued concepts out there, so on the social media space of investing. You don't want to know the value of what you're buying. What you know is, because it's a great business, you just buy. Some say the averaging. Yeah, the concept of averaging works in within a price range too. There is always a time to overpay. So just imagine people that bought this in 2013. Do you know how many? Do you have that luxury of time to wait it out? Even though you want to invest in the long run, your pricing when you enter will also help you maximize your return. You don't just blindly close eyes and start buying without looking at valuation, because valuation is what gives you a sense of what is this business, what am I overpaying for it, even though it's a great business. So even a technical chart can give you a value of the business. You must not be an analyst to get, but just to respect that. That is the difference between you and firms. Unless you know how to go around these things. If not, you think you don't need knowledge. You think you don't need to watch some of these analysis we put out there, just because you can simply have a sense of, it has been there, let me buy. I'm buying for the next 100 years. Great, but always know that there is also price levels matters too. Okay, so this is 2013. Hold on a sec. Okay, so for people that bought 2013, even you are not a technical analyst, but from this chart you'll get something. You bought at 2013 because somebody told you great business, buy at any time, nothing. Do you know how many years from there, what price started? The price started going down. from 2013 to 2021 is roughly 9 years. Price toppled, COVID hit and everything. So your investment went underwater for complete 9 years, stayed sideways until 2025. That's 12 good years. You are sitting, this is more than how many percent drawdown? Can you wait out for this? What if you have known that there is a way that this year is overvalued, there is a valuation that is not supporting this, and you just ignore? There is other businesses to buy in. And maybe here valuation started peaking, started looking good and stuff like that, and you entered here. So all this lost money, there is an opportunity for cost in economies for that money you locked up. And we can also go to dividend history, and of course your thought is as good as your guess is as good as mine. So this is a lost opportunity. This is one way we are addressing that. Don't always buy because it's a great business. Also look at the valuation. If you don't know how to do those valuations, look at our research, the free ones we put out there or the paid one, whatever. Just find a way, watch YouTube, find it, to get a sense. This thing I'm paying for, am I overpaying for it in terms of valuation? So of course recovery started coming 2025, then every recovery. So the guys that bought in here, they waited all these years before price get back to their entry, and took it out, and we almost had a high of 500. Then it retraced, and currently we are trading around 360 something naira. So this is what the price of Guinness has done. So let's look at the income statements. Okay, this is the free cash flow. Let's get that. So this is the income statement. So for the income statement, you see what revenue did. So revenue grew more to over 265 billion. But cost of sales, this is where this is the devil in the detail. So the cost of sales grew So the cost of sales grew more than the revenue. So if revenue is growing by 11.8%, cost of sales grew by 13.5%. So that is why we had that margin compression, which we are going to talk about. So this is the first thing we're going to talk about. Then the next thing is, of course, cost of sales, input, whatever, all those stuffs, what all it took for sales to go on. We are still gonna get into it, raw material, stuff like that. Then for the bottom line, then you look at profit after deduction and there's a profit for the period after taxation and stuff like that. So we had 25.3 billion as against 16.5 billion in 20. So it was a good result outside this cost of sales, which we are going to talk about then. If you look at the margins, they are all looking up outside the gross margin, which was affected by the cost of sales. And of course, coverage ratio too. So lending, that borrowing reduced. That's why the coverage ratio also ticked and ballooned up. So they now have enough buffer and stuff like that. So this is the income statement. Hold that one by the side. Then let's look at the balance sheet. So for the balance sheet, of course, you will see that assets grew more by 4%. So they are sitting over 255.3 billion in assets. Then equity, very much important. Equity grew over 64.8%. One interesting thing is that the return earning now moved from a negative to positive, which is a welcome development. And then the lending, the borrowing was now cut down more. That's why you see long-term borrowing also dropped. Then you see the liability stuff, and then finally look at the margins. Even though on the short term, to me, short term obligation is still very much stressed, both the current and quick ratio, but the liability to equity, the equity to asset too, and stuff like that. There was an improvement in those days. Then return on assets over 9.9%. Then return on equity, of course, was over close to 9.4 trillion. So pretty good book, manageable, but there should be an improvement in these short-term obligations so that it will show how liquid the books are. Then finally, let's look at if they have any free cash flow from the cash flow statement. Okay, so this is the cash flow. So for the free cash flow, yeah, we had more. So over 6.18 billion in free cash flow as against 26.18 billion as against 24.5 billion. So the free cash flow also increased very well. So behind this, the supportive numbers, so you need to now read the thesis. You read the thesis, but one thing is, so we can say that the revenue growth is operational, and the revenue growing by 11%. The growth is much more of a volume play and price increase too. So if you have been consuming an average of Guinness malt and stuff like that, you see that the price has increased marginally. That's what led to the revenue growth, and also they sold more in terms of volume. Then they only report one segment. They didn't distribute it among their product line, so it's just one. Then geographically, of course, they sell domestically. So domestic sales grew by 11% from a tune of 260.9 billion, while export sales grew by 23%. So export sales grew more, but sometimes it's just how significant is the export. We have had sometimes you see where exports growing by 10,000%, but it's just a insignificant number in terms of naira. So that's export sales. It grew to the tune of 4 billion, and it's just that export is just contributing 1.5% to the total revenue. So the growth is grew to earn money, but it's just somehow slightly insignificant. Then another thing to note that is the naira volatility that has been a headwind for these businesses is now off the way. It affected in 25, but the naira has stabilized. So in 26, we can see that it helped. It no longer horses. Then cost of sales, which we said has grown more than revenue, and this can be an indirect inflection signal outside how efficient things are being run. Then another thing that was flagged is them paying dividend when their working capital is not still in a great shape. So that decision, that management decision of capital allocation, because you have two choices to make. Either you return those money and plug it back into the business, or you pay dividend. For them to make that decision of paying dividend, maybe because of maybe because an average Nigerian investor wants dividend, maybe to signal to the market, okay, let's just pay this. But when your working capital is not that great, it's a question to be looked into. So going forward, these are the bull case and the bear case. You read it up and see you on the next analysis. Do have a profitable week.